Hello traders, today is the 15th of March. My name is Neville Hornsey, market analyst YouTrading, and today I'm looking at the New Zealand dollar versus the US dollar. Okay, we're going to start with the YouTrading.com Forex heat map. We can see here that the euro has once again started the London session, the strongest currency. Looking down, the Canadian dollar is the weakest as oil comes off its highs. Pound is doing pretty well. US dollar is doing quite well. So top right corner is green, bottom left hand corner is turning red. So we're seeing more of a risk off day today. However, the Swiss franc is also being sold. So not fully risk on, risk off. It's still rather mixed, and we're still trading on news headlines. Just going to the latest news, we can see that German ZEW economic sentiment came in a lot worse than expected. Expectations were for the sentiment index to come in at 10, down from the 54.3 previous from February. It actually came in at minus 39.3. However, ZEW current conditions for Germany came in slightly better than expected, but still a lot worse than the previous reading. So looking down, we've got obviously escalations in Russia and Ukraine, both in between the delegations that are trying to organize some peace talks. But we've also got Ukraine authorities issuing a countrywide air raid warning. So this is going to be moving the markets as we get more news out of both what actually happens on the ground and what is happening between the two delegations. So looking at the heat map, if the US dollar is getting stronger and the commodity pairs are getting weaker, we should be looking to go long the dollar and short a commodity pair ahead of the FOMC tomorrow. FOMC has been signaling that they want to raise rates. So tomorrow, first rate hike for a couple of years. And we're sort of seeing that all of the curve, so all the way from like the 1 year all the way up through to the 30-year, since the December FOMC meeting has been rapidly rising. Currently, the benchmark 10-year yield is above 2. And we see here that even the high and the low are above 2%. So basically, US dollar has been supported by rising yields and the safe haven flows because of what's happening in Ukraine. Going to the actual chart, looking to the sentiment indicator on active trader platform, we can see here that 56% of traders are looking to go short, 44% are trying to go long the New Zealand dollar versus the US dollar. So pretty much evens. So if we just look to how the US index, dollar index, compares to the New Zealand dollar versus US dollar, obviously the Kiwi dollar is a USD cross. So we're expecting to see when the US dollar here in yellow goes higher, we're expecting the New Zealand dollar versus the US dollar to go lower. And that is pretty much true. This is a weekly chart, and you can see throughout history as one goes up, the other one goes down. However, if we just sort of zoom in to what happened in the end of January into February, so pretty much all the way through 2022 so far, we had both the New Zealand dollar versus US dollar going higher and also the US dollar index going higher. So for me, there's a bit of a disconnect between the Kiwi and the dollar. So I'm expecting the dollar to carry on going higher based on what the FOMC are probably going to do. They're probably going to come out and say that, yes, there are risks ahead because of Ukraine and Russia, but they're going to sort of push through with their rate hike cycle, which would ultimately strengthen the dollar as long as they don't give some sort of caveat or sort of less, well, it could be dovish, but it's probably, even if it was less hawkish, maybe some of the dollar pricing has already been sort of priced in. But I am expecting the Kiwi to come lower and to correct because, for the whole of February and March so far, the Kiwi has been going higher, as has the dollar index. For me, this Kiwi should be, this in blue, should be below this swing low from the 23rd of January. All right, so I'll just get rid of that. So if we were to see a pullback in the New Zealand dollar versus US dollar back below the 0.654, what would be the next target? So if we go back to candle chart, we can see here in May 2020, so we had the pandemic lows through March 2020. Then we had rising sort of commodity-based, inflation-based, and stimulus-based rally. So we had that rally where everything was sort of reflating. Then as the dollar got stronger, we saw the Kiwi coming down. but we had this impulsive move here, which left an imbalance. So between 0.61750 and 0.624, I'm thinking that there's a good target to the downside. If we look to the left here, in fact, if I go to a monthly chart, we had the low from September 2021. Then we had a lower low in November. Then we can see here that price action has basically sort of found resistance at the low of the September candle. So I'm expecting that to hold 0.68758 to hold, for us to, now we've tested the liquidity above January 2022. I'm looking to see if we can, if that was a fake breakout, I'm looking for a continuation to the downside now and to target the highs of April 20 or maybe even March 2020. Going to a daily chart, this is where I expect the New Zealand dollar to be compared to what happened in the US dollar index. And obviously, if China is going to have more problems with COVID, and we've got obviously a war in Ukraine, then economic activity, exports are probably going to come down, industrial production probably come down, supply chain bottlenecks probably rise, and we'll probably see a disturbance in the commodity pairs. So again, I think this accelerates to the downside. And then we fill in this gap here of this imbalance here from June 2020, like I said before. So looking across, some traders may actually be looking for a long in the New Zealand dollar versus US dollar. Maybe the FOMC have priced in everything and they could be looking for some sort of head and shoulders or inverse head and shoulders, shall I say, in the Kiwi. So we could get a scenario where this next pullback comes down towards 0.665, finds support at previous resistance. But as you can see, price action has actually traded through pretty much all of these levels so far. So yeah, if we do see, a rise for whatever reason in the Kiwi above the 0.688, then that could be a inverse head and shoulders. We could be looking to take out some liquidity above here. Now, if you do get an inverse head and shoulders or even a head and shoulders pattern, if you take the head to the neckline and then move that up, that becomes your target. So around the 0.74 would be a decent target. And if I go back to a monthly chart, you could even say that this bigger structure here is a larger inverse head and shoulders. So, maybe we could come from this high here and look to the left. We've got a sort of relatively equal high. So that's a liquidity pool above 0.888. So if we were to get a larger inverse head and shoulders, possibly, with that sort of tag of the highs from April 2020 or the summer of 2020, maybe we do get that big push up eventually, which would take us, above this double top over here. But for now, I'm just looking to sort of see what happens in the sort of near term. I'm not a great fan of the head and shoulders. Generally, if you put your stop, if you do see a rise in the Kiwi, lots of traders would have put their stops underneath the right hand shoulder, and then that would be where the sort of algos and more informed traders will target. So we could see a slight bump up to the sort of lows of the 11th of March into this area here. So this is Friday's low. Then we had the Sunday open. So around there, 0.68 could be a bit of resistance. Like I said, traders then think it's an inverse head and shoulders. They put the stops underneath the right hand shoulder, and then we get a pushback through, taking over these stops underneath these swing lows until we actually get below the head. If that happens, then that's when my idea, or my initial sort of idea, we come back down towards the 0.62, and then we can sort of consider what happens next based on the larger, once these prices have been taken, then we can sort of consider what the next step is. So I'm looking for a quick bounce up towards 0.68. Then I'm looking for a rejection of that level to come back down towards the 0.62. That would be a great trade with my stop above the 0.6935. Obviously, if that stop gets taken, I'm completely wrong. This becomes a inverse head and shoulders, and then I can look for a retest and continuation higher of the 0.69. So yeah, that's what I'm looking for. That's the sort of higher time frame sort of analysis. A lot of it does depend on the market reaction to the FOMC, what happens with the dollar, But based on the sort of dislocation between the New Zealand dollar and the US dollar index, I think this New Zealand dollar should be a lot lower by now. All right, I'll speak to you again tomorrow, and good luck today. And yeah, take care.